PayPal crashed since we did our previous look at their previous earnings yesterday, so in one day. And it would be really interesting. You can watch that video, kind of follow my thought process looking through that, and then see the result now if you'd like. But if not, you can just kind of watch this video. Entertainment, educational purposes only, of course. So let's take a look and see what's happened. So here's the daily chart, and you can see at the end of the day it was at 176. And extended trading after earnings pretty much brought it down to 145 pretty quickly, which is quite a landslide. And in terms of the yearly chart, you can see I had this channel drawn, and this channel was drawn before, and I didn't really know exactly what was going to happen, right? It could have broken out of the channel and become super positive, right? And it still could. You know, you never know with this market. But nevertheless, there was a good chance that it could just follow the channel down. And in fact, if you look at 145 there, it's almost at the bottom of the channel. So where's it going to go from here? Well, of course, in the morning, if you're just looking at this technically, it could really just spike back up to 160 or something like that, try and fill the gap, whatever is going to happen. It is possible for it to go outside of the channel. I just think it'll bounce back if it does at some point. Obviously, hard to tell exactly what's going to happen, so let's just look at some of the release in terms of the earnings. It's not a full 10K, so we'll just do with what they've given us. So in terms of their net new accounts, active accounts, I guess, it's down 39% from the previous quarter. And in terms of net revenue, and I think pretty much everything else is quite positive, although earnings per share is a little bit low, but net revenue is up 13%, operating cash flow is up 31%. So that'll be an interesting question. What just happened? How did you have net revenue only increase 13%? You know, your earnings per share not much at all, or maybe down, and yet operating cash flow is going up. So what is going on there? Now, I want to be clear. Some of the drop in PayPal might be because of, you know, expectations, future expectations. A lot of people are talking about how they've missed future expectations. You know, they're expecting $5. Analysts were expecting, you know, above $5, and they're saying now around $4. PayPal itself. So, you know, maybe that's part of it. I'm just going to ignore that. You shouldn't ignore that, of course. You can watch other videos, and maybe we'll have a follow-up after I listen to the meeting more carefully. If you'd like, let me know, please. I'm happy to do that. Or any stock ticker symbol you want me to look into, I'm happy to have some ideas. Anyway, they mention here DoorDash. I don't know exactly why, because it's already in 2020 they mentioned DoorDash adding PayPal, but I suppose they're trying to show off the fact that you know, PayPal since 2020 maybe has been helping DoorDash get customers. Just kind of funny looking at how badly this news was received, and that they kind of snuck in some slides that seem a little out of date personally, but maybe I'm wrong, and maybe I don't understand, and maybe in the meeting that'll be explained a little bit better, but just kind of odd. Anyway, they mention, here's, you know, some of the very positive strategic initiatives, and we kind of touched on this in the previous video in a general sense. Now we're getting more specifics. You know, they're expanding their global pay offerings, Spain, Italy. So we mentioned the idea of them expanding not only their geography, but the kind of services that they can offer. And that was specifically this idea of being able to pay later. We didn't know about this Zettel terminal, which is going to be helpful in the UK, Sweden, and Germany, right? So enhancing some of those markets. And UK was very large before. I'm not sure right now if it's, you know, shrunk or not, just because I think on one of the sheets it wasn't listed, although America was, and previously in the other 10Ks it was, but, you know, we don't have full information here, so it's a little hard to tell. Anyway, Honey was introduced to the Netherlands, so a subsidiary of PayPal, right? They bought them. And obviously, PayPal is going to allow people to get, I should say PayPal, Honey is going to get cash back through PayPal when you use Honey. And so, you know, like I said, there's this synergy. Does that mean that people will be more incentivized to use PayPal accounts? I actually thought some of the synergy from Honey was going to come from the fact that PayPal is going to be able to know what people are spending, where they're spending it. Are they PayPal customers? Are they using PayPal? Get a lot more information just in terms of their service and how well it competes with others. So I thought that was kind of fascinating. And obviously there's going to be some synergy in terms of how all of these companies operate together. Okay, now if we look at the net income, this is obviously a big red flag. The previous quarter, or previous year, same quarter, I should say, was $1.5 billion. Now it's only $800 million. And so earnings per share fell from $1.32 to 68 cents. And so obviously you have to understand, why is that happening? What's going on? Now here, interestingly enough, they said the revenue is expected to grow about 6% in the next year. When you exclude eBay, PayPal itself is, I suppose, in all the other areas growing 14%. So that's actually kind of interesting. Means that eBay, obviously, there's some stagnation there, but the rest of PayPal is kind of firing on quite a few cylinders. Maybe people are upset at that number, but I still think it's pretty impressive. Now, in terms of their total current assets, they're $52 billion and total assets $75 billion, very close to what we had before in the previous quarter. You can watch the previous video. I think it was around $54 billion, so a little bit lower there. And here we have total current liabilities at $43 billion. I don't remember the exact number, but it was around there, maybe a little bit lower. So they've increased their total current liabilities, but still looking very good right there at total current assets, much more outpacing their total current liabilities. So very well, I think financially speaking, although I suppose that's good for a financial company to be financially well situated, right? Having more current assets than current liabilities. Anyway, net revenues up $800 million, right? So that's really impressive. That's like a 10%, getting close to 20%, right? 15% growth, whatever number exactly. But it doesn't really matter. You know why? Because we mentioned in our last video, they had a huge problem with transaction expenses increasing with the revenue, right? And so that is a just horrible situation, because that $800 million increase, well, that was followed up by a $600 roughly million increase in transaction expense. And that was presumably from people using more credit cards with PayPal. And PayPal, what I don't know exactly where their transaction expenses are going on, but clearly it's growing quite substantially. And they have to figure out how to lower that, because if they can lower that to previous years, and we'll have to see that a little bit later on, then their income will increase substantially, even if the net revenue does not increase. That'll be a huge boon. And so if you're going to be bullish on PayPal, you want to really have that answer. How are they going to do that? Because their operating income negligibly increased, even though with $800 million increase in revenue, right? So that's, to me, a little bit ridiculous. Now, here's another question. The other income, previous year was $900 million. This year it's down $400 million. That's obviously $900 million. That's pretty much matching their operating income. So their other income is matching. It's doubling their income in the previous year, 3 months ending in December. And yet now, not only are we not matching it, but we're losing some. And so obviously income before taxes, you're looking more than 2 times they had income in the previous year, right? 1.9 billion, versus 700 million. That's getting almost 3 times, right? That's a little bit crazy. Now, in terms of net income, it's only twice, so 1.5 billion versus 800 million, and that's because of the taxes working in their favor to balance things out a little bit, I suppose. But these numbers are super, super important, right? That you can see right here. Transaction expenses and the other income, right? You need to understand what's going on with those. Are they going to improve? Because it's hard to invest in this company if you're not going to see those kind of numbers return, right? If you're not going to see the other income become positive, or you're not going to see the transaction expenses start going down anytime soon, then does it really matter if net revenues increase, right? That would be, these are kind of what I would consider red flags. And I think there's a lot of positivity there, assuming you get the right answer. And we'll talk about a little bit more, some of those things at the end. Okay, so in terms of their net income, obviously we just said it was 1.6 billion before 800 million. How does that work with cash flow? Because we look at the cash flow, you can see it's 1.7 billion versus 1.3 billion. It's gone up $400 million in terms of cash flow. That's pretty impressive. And so the major reason why it seems are these net losses or gains on strategic investments. And so previously there were these net gains of $941 million. And so here it's a negative. Why is it a negative? Because if you had the income of $1.5 billion, well, if some of that is just from strategic investments, that's not cash, or not necessarily cash. In this case, it's not cash. And so we're gonna remove that from the net income. Whereas the net income for currently for this year, for this quarter, is quote unquote positive 290 million, that means they lost money on strategic investments. That's not good. But what it does mean is if they had an net income of $800 million and they lost money, they must have had a lot more cash flow to be able to lose that money. So that's, the big change here. And so interestingly enough, in terms of their cash, they're doing quite well. Obviously, in terms of their income, they're not. And that's because of this strategic investment. So need some more information there as well. Now, interestingly enough, in terms of their cash flow from financing activity, they're purchasing a lot more treasury stock. I just find that interesting, I suppose, right? Especially with inflation and interest rates going up. Is this going to be a safe place to put their money? Now, of course, it is going to be safe, right? They're not going to lose the principal, but are they going to make as much money as they can? In my opinion, I would be kind of surprised, right? You would have to expect deflation for that to happen, but I think it's going to be inflationary. Now, obviously, these things can just mature. They don't have to sell them, and they'll make some small percentage. So, like we said before, they have to protect their principal. They can't just, risk people's money in the bank accounts in PayPal and invest in other things. But nevertheless, it's just something to consider that they're not finding another way that's safe and secure and yet offering them, as far as I can tell. Maybe some of these treasury stocks are in other countries. I have no idea. Okay, just in terms of their cash and cash equivalents, at the end of the period versus the beginning of the period, well, it's just $18 billion kind of sitting there ready for them to have available if people take it out of their accounts or they need the money. So I guess that kind of makes sense, and they're kind of keeping that standard, I suppose. Fair enough. Now, in terms of their net revenue, you can kind of see when you look at the previous quarters, it was kind of stagnant. However, this past quarter was pretty impressive, a 14% increase. And in terms of comparing it to the previous year, you can see there's just tons of growth. So when you're looking at each quarter, you're kind of stagnant, which is not great, which is probably why people are upset about the company, although this quarter was quite good. But compared to the previous year, right, all of these are quite positive because I guess the previous year was not so great. So obviously they are growing in a general sense, a longer trend maybe, but it looks a little stagnant. We got this major blip recently though, so maybe things are on the up and up, right? If you're an investor in PayPal, I would take that as more positive news or hopeful news. Now, in terms of current quarter versus previous quarter of value-added services, I found this interesting. It's just kind of ping-ponging around. However, it's still kind of growing, right? If you look at 434, right? At December 31st, it was 434 million, but now we're up to 541 million. So as much as it's kind of ping-ponging its way, but it's ping-ponging its way upward. So that's the way I would look at it. And once again, compared to the previous year, it's very positive. However, did it peak, at September 30th, 2021 at 575? Maybe, maybe not. Who knows? It might have just been a slow transitionary time. I'm not too bothered by that. Yes, it looks like a little bit of stagnation, but it looks like a general upward trend in both of these things. And so I think that's actually pretty positive. Like I said, risk of stagnation, but I don't see it quite so obvious in terms of these numbers anyway. Now, in terms of the revenue by geography, you can see America doing quite well. They're routinely growing revenue, so that is very good. In terms of international, ping-ponging, but it looks like it's I don't know. It's just kind of like ping-pongs around. And so it's really hard to tell what's going to happen next quarter versus this quarter. Does that mean it's going to ping-pong back down? I have no idea. Who knows? But the key one is U.S. revenue because that is the largest amount of their revenue. Of course, you want international net revenue to increase as well. So hopefully we'll see that happen. Now, in terms of their... So what I just want to point out here, and I think the most important part here, as far as I can tell, is this transaction expense rate. And so when you're looking at it, you can see previously, in terms of the previous quarters, it's the highest it's ever been, but it's always kind of around 0.8%, but it's at the higher end now, right? And so if you can lower this to the previous numbers, that would be huge. Now, in terms of number of payment transactions, compared to this current quarter versus previous quarter, you can see there's a growth. So not only are they growing active accounts, you can see up here, although maybe that's slowed down, but it is still growing, but the number of transactions is also increasing. And of course, if you can look below and it's number of transactions per active account, that's also steadily growing. So, to me, that's pretty positive. And the biggest problem is going to be this transaction margin just going down. And the biggest problem there is presumably the expense rate, right? They will really, we need a real serious answer to that. So why is the transaction expense increasing? You want to know the answer to that. How will PayPal continue to grow users and not just stay idle? You want to know that. And obviously they're expanding, and we mentioned in previous video, you can watch that, what the general sense I have, and I think it's very positive, and they're obviously trying. So what is this other income that's affecting the EPS? Remember, it doubled it in the previous quarter, or the same quarter of the previous year. I can't remember exactly, but it was double, and here it was negative. So what is that? And we'll have an answer in a second. And can investments outpace inflation, right? That's going to be, or interest rates, however you want to phrase that exactly. That's going to be the question. And so if we look at the previous 10K where we have a lot more information, here we can see the other income expense net. They have it listed here, and it's this net gains on strategic investments. We saw that before in terms of cash flow. So the previous year was very high. This year they had lost money. So presumably that's what's affecting the other income, right? So their strategic investment in that previous year was huge. It was very positive. Is that going to be something that's going to continually be positive, right? Can they bring that back? I'm not saying they can double income, double their revenue. I'm not sure that's so obvious, but maybe they don't have to subtract from their income. They don't have to lose money on their strategic investments, hopefully. So that's the real question. That's very important now. So now we don't just have those two questions kind of unified to what is going on with strategic investments. We need to know more because that'll help us with the other income. That'll help us with earnings per share. Very important. And of course, we still have to know all the other things as well. Now, in terms of interest rate risk, right, this was the other question we had about can the investments outpace inflation? Well, here is kind of, if we're going to slow and curb inflation, which I'm not sure we will, but hopefully we will. Certainly, I think the Federal Reserve is going to try that. I do think. I think they're just going to let it go a little bit longer than maybe people expect. Now, if interest rates are increased by 100 basis points, which is in theory very possible to happen this year, right? So when you think about 100 basis points, well, the Federal Reserve is mentioning increasing I don't know if they mentioned this actually, but the expectation was not so long ago that there were going to be 4 increases of 25 basis points throughout the year. And I think that is 3 or 4, whatever exactly the number. But it seemed like consensus was 4, and that seems to be now a low number. People are mentioning 5, 6, 7, maybe the first one's 50 basis points. Like I said, I think the Federal Reserve is going to allow inflation to go a little bit longer. They want to look like they're doing something. They don't want to spook everyone. They want inflation to happen so that they can more easily, I think, control the money supply and allow, for if inflation happens, they don't have to do nearly as much in terms of tightening, I think, right? Like if they want to stop inflation, they're going to have to raise interest rates a lot. Whereas they could allow inflation to happen and just kind of eat away at people's money. They don't have to increase interest rates as much. They don't have to spook everyone. They can kind of let inflation go. And as long as they can lie and say, I don't know about lie, but maybe massage things or believe that it's going to be shorter. Anyway, I'm rambling. But what the key point is, if this happens, and it's likely it will happen, and then, once again, this is from the previous 10K, so their available for sale debt securities would have decreased by approximately 243 million, so about $250 million. Now, I don't remember the exact numbers. You can look it up in the previous video, but it was pretty close to, I think, like $7 billion, roughly speaking. Now, when I say roughly speaking, and I didn't get the exact number because I don't know exactly what they mean available for sale debt securities in their investment portfolio. Does that include the accounts? Does that just include the short and long-term investment? I'm not entirely sure. It would be nice to know some of these numbers a little bit more specifically. But I would assume it's the short and long-term investment portfolio, and that's where I got the $7 billion from. Once again, you can watch the previous video. And if it's going to be $243 million decrease, that's not huge compared to $7 billion, right? 10% decrease would be $700 million. But this is close to a 5% decrease in terms of those in terms of the available for sale debt securities. So on one hand, it's not major. They still have $7 billion in terms of the short and long term. But on the other hand, it's not nothing. It's pretty important. And my question would be, is this factored into strategic investments somehow? Is that part of it? Is that going to have an effect? This is why we need to really know how some of these things operate. And hopefully we'll have some more information if you'd like, but just let me know in the comment, or if you know what's going on, let me know. Let everyone know. They mentioned they have a $9 billion in fixed rate debt. So on one hand, that's good. I mean, it'll be easier to pay off that debt, right, if inflation happens. On the other hand, the fair value of these things will go down if interest rates go up, but they can just pay them off. They don't, I don't know exactly. So it's not a big deal to me. They also mentioned that they have a credit revolving facility in terms of that's at floating rates, not at fixed rates, like they're $9 billion. So I think they're doing much better in terms of their debt because it's mostly, as far as I can tell, in the fixed rate. And so if it's mostly in the fixed rate, that means that inflation will actually, in theory, help them pay off that debt. If they do need to borrow under the credit facility, obviously, that's going to be a lot trickier because that will be at a much higher rate. Obviously, they can do it and they can pay it off, but I don't know how large their borrowings are under that facility. I assume they'll focus on paying those off first, though, if there is an issue. And of course, they mentioned that there's an impact on their customers sometimes in terms of their willingness to spend and whether they'll be able to pay. Okay, so this is pretty much the whole short 8K. They just published some of their information and some of the previous 10K. So, we have the 4 questions that you really need to be, if you want to invest in PayPal, that's what I would say. I would say you really want to know the answers to those things. I think the expense rate to me is a really big deal. The strategic investments, not a major deal, because obviously they're going to try and make money on that. They're trying to be at least positive, certainly not negative. Who would want to be negative? So on one hand, not a big deal because you assume they're trying to be positive. I would just love to know what those strategic investments really are so I could kind of gauge, well, will they be positive or not? And, in terms of the interest rate risk, that is to me, that does bother me, that does niggle me. Maybe not as much as some of these other things, though. So I did mention the previous video in the inflation risks. I was really talking about this kind of interest rate risk. I had to dig through the 10K to find it. But I think this is what I was pretty sure I was talking about. So anyway, a big deal, but not major compared to the other ones. I say this is kind of like a yellow flag, like kind of bothers me. I want to make sure maybe that they can grow their revenue to account for this. That's totally possible. They're growing quite well. I would like to know how they continue growing though. And like I said, that's maybe not the biggest deal. These other questions I think are much bigger deals, but that's still important because people's sentiment in terms of their expectations of future growth are a big deal, according to others, why this stock has fallen. My personal opinion, I think that everything I've just shown you is enough reason for it to have fallen substantially, but I don't think that means it can't come back. It might, and you saw the technicals in terms of the short term. I think PayPal is a great company, a really interesting company. I don't entirely understand why people, let's say, use Venmo and PayPal so much, but they do, and people like it. And when you like something, you use it. Well, that's a user, and so it's an impressive thing. And when you're using it, that's a moat, right? You just become habitual in terms of using this type of thing to pay. Now, obviously, they're going to have a lot of competition, especially with Apple coming more and more into the mix, and all these other companies, Square, whatever they might be. They've been competition for a long time though. But nevertheless, this is all very positive for PayPal, I think, except for some of these questions. And they have a lot of impressive numbers, and I think that they're going to do quite well. The question is, when does the downtrend end? And so if I was getting into PayPal, I might be happy to wait. Why? Well, for one thing, answers the questions. But for another, until I see the trend kind of ending, I'm not entirely sure that I would be expecting it to end anytime soon. Maybe it'll slow down, whatever it might be. Maybe it'll trade sideways for a while. But I would like to kind of see this downward negative trend end. Now, you might miss some of the upward trend to make sure that it's exited this kind of downward direction. But so what? You might, in my opinion, entertainment purposes only, of course, you're removing some of that risk, which I think is pretty important with PayPal, as we listed all these problems. Anyway, thank you so much for watching. Really appreciate it.